It's a great pleasure to be here. And now you know who I am. I'll do this talk in three parts. First, I'll crack some jokes because I've had 3 hours of sleep last night and you've been sitting on your backsides for most of the afternoon. So I guess we all need a little jolt. Then I'll say a few things about what might be sort of some of the key themes in the review of the Non-Financial Reporting Directive. And then I'll talk a little bit about process. And I don't know whether you envisage questions afterwards, but if there are any, and I'm able to answer them, then I can try. We'll see how it goes in terms of timing. So the jokes. Knock, knock. No, I'm not going to do those. So I remember when you presented, Philip, your first report, which I can't remember now if it was in late 2018 or early 2019. Just a year ago. So a year ago, I think it was it was in this room, and I think I went out on the limb, and in a purely private capacity, I stated that I would be very surprised if the next commission didn't propose a revision of the Non-Financial Reporting Directive. So I'm very grateful to President von der Leyen and Vice President Dombrovskis for having picked up on that idea, because otherwise I would have had a lot of egg on my face at this stage. And as you all know, in the European Green Deal that was published on the 11th of December, if I remember correctly, the Commission announced that we will do a review, and I think it actually means a revision, of this directive in 2020. I'm working very hard to push this 2020 as far back into 2020 as possible, because otherwise me and my team are going to go under a lot of stress. So that was kind of a joke. Second joke I want to make is to thank you very much, Philip, for writing our impact assessment. Michael, who is sitting here, I want to thank you very much for writing our proposal, which I understand is what you're doing. So I think Tom and Elena, who are two of the core members of the NFRD team in my unit, I think we can all sit back and just let these people get on with the job, and then we'll just take up whatever you come up with. So that's very, very kind of you. So thank you. Of course, that's not how it's going to work, but I do want to acknowledge the very important work that I think I already said this when you presented your first report. I think this is sterling work. It's very good quality stuff, and it's precisely the kind of input that we need in order to hopefully make the right decisions about the review of the Non-Financial Reporting Directive. And I think you can expect that there might be a footnote reference to your report in the impact assessment. So. Big picture, I can only agree with the direction of your conclusions, and I think that is very much very similar to the conclusions that we have drawn in our own analysis. And in that sense, it's comforting to see that our analysis seems to be correct. Of course, it's not so comforting to see the conclusions that we draw from that analysis, because the conclusions are that we are not where we should be. And that is a very clear message from your work, but I have yet to find anybody in the last few years who has claimed the contrary. So I don't think there is anybody who claims that we're in a perfect world and nothing needs to be done. So the question is, how do we drive change? There are, to a certain extent, the challenge. Of course, there's a lot of mechanics of how do we do reporting, and the nitty-gritty bolts and the nitty-gritty details. But a lot of this, I think, is about cultural change and about also the way that organizations and companies work. One of the big challenges, I think, is to make sure that sustainability is fully integrated into the mainstream of decision-making and strategies of companies. And that means a number of things. On the one hand, when we think about purely the reporting aspect, it means bringing together financial and non-financial or sustainability, whatever we want to call it, reporting. To a certain extent, or to maybe even a large extent, this still happens in different silos. And at the end of the day, even if the information finds its way, both sets of information find their way into the annual financial report, the connectivity, which is a word that Richard, I think, likes a lot. I can't see, is Richard still here? There you go. Is still missing. And I think we have to work on that connectivity. And that will be one of the challenges as we prepare the proposal, I think, but not only for us, but also in the future, if we move towards the use of a single set of standards, that will also be a challenge for the standard setter to ensure that there is that connectivity between the financial and the non-financial part of the report. And that requires breaking silos inside companies. It requires that the people who produce the sustainability or CSR reports work in tandem with the people who produce the financial reports. And maybe it requires even some organizational change in the sense that all of these people should be brought together under a single reporting chain. Similarly, as I said before, I think what we need to do is mainstream sustainability. I think the last thing we need to do is ask companies to produce a separate sustainability strategy. Sustainability is not an add-on. Sustainability today is at the core of what companies should be thinking about, because if that is not the case, then not only is the planet going to go to hell, but some of the companies might go bankrupt. And therefore, there is a strong case for mainstreaming that sustainability. Now, we're not going to achieve everything by through disclosure and reporting requirements, but and a number of speakers have mentioned the importance of looking at other aspects related to corporate governance, due diligence, and so on, and that is certainly true. Although, of course, if you're a CFO and you reach the conclusion that if you're not doing these things because your investors are asking for the information and you're not able to supply the information to your investors, and therefore your cost of capital goes up, then that itself can have powerful behavioral incentives. So I think reporting is certainly an important part of the picture, even if it isn't necessarily the answer to all the problems. So how do we go about reviewing the directive and setting standards, if that is the way we ultimately go? One of the things which I am very keen to avoid is that this becomes another compliance exercise. There is a lot of judgment involved in financial reporting, and I think there is a lot of judgment, perhaps even more, involved in non-financial reporting. So while we can clarify the legal framework, I am skeptical on a personal level, I have to say again, to cover my back, that we can simply achieve this by just coming up with a set of KPIs and that everybody has to report against the same KPIs and problem solved. I really don't think that is the right way to go. Linked to that, there is a debate about the nature and role of standards. And we know from the financial reporting world that there's a long-standing debate about the merits of principles-based standards versus the merits of rules-based standards. And the European Financial Reporting Advisory Group organized a conference not that long ago, I think it was in the Stanhope Hotel, precisely on this theme, on the interplay between rules-based and principles-based approaches to standard setting. And I said at the time that I think this debate is likely to reproduce itself in the debate we are inevitably, I think, going to have about the role of standards in the field of non-financial reporting or sustainability reporting or ESG reporting or whatever we call it. The key problems we face in the non-financial area today are, to a certain extent, similar to those that we have in the past faced in the field of financial reporting. I can mention three, which are the need to ensure comparability of information. Second, the need to ensure the reliability of information. And third, the need to ensure the relevance of information. And those words are not chosen, those three terms are not chosen at random. They are part of the conceptual framework that the ISB uses, for example, to develop its international financial reporting standards. And they are well-known qualitative attributes of effective information and corporate information. And I think, as I said, that also applies in the non-financial area. Now, if we think about comparability, the issue has already been mentioned, that one of the difficulties is that at the moment there is a little bit of an alphabet soup of standards available out there, standards and frameworks, and also the fact that the Non-Financial Reporting Directive is a rather high-level principles-based directive, I would even say. And I think that was probably the right way to start, because remember, this work started. I saw Jeroen Hoyer earlier on at the drinks. I don't know if Jeroen's still here. He was my head of unit a number of years ago, and he was one of the shakers and movers behind the non-financial directive many years ago. And that was the right way to go, because at the time this was a fairly novel area of regulation, and we were all sort of, to a certain extent, feeling around in the dark to see which way we needed to go. But things have moved on, partly because sustainability is now not only a political imperative, but we've moved beyond just the politics, and we're now in the field of law, and we have adopted legislation that requires investors to disclose information, sustainability-related information about their investment products and strategies. And they can only do that if they receive adequate information from their investees. So the political context has moved on, the legal context has moved on, and the market context has moved on, because there is clearly also a very big market trend towards demanding more information of a non-financial nature. Again, we can all argue about the words, but we know what we mean. And I've even heard an investor recently tell me that nowadays 80% of the investment decisions that this company made was actually based on non-financial / ESG information. So that underlines the importance of the topic. But that means that because the directive has, in a number of countries, pretty much been copied and pasted into national law, there's not a lot of clarity in national law either about how companies need to apply it. So we have an alphabet soup of standards, and we have law which is often not very clear at this moment. So again, we need to step ahead and deal with this issue. When I think about reliability, there are many dimensions to reliability, but one of them is the question of assurance or audit. In the field of financial reporting, audits at the level of reasonable assurance is pretty much the norm, certainly in the EU. In the accounting directive, there is some requirement for the auditor to check the management report, in particular a consistency check between the management report and the financial statements. But when it comes to the non-financial statement foreseen in Article 19A of the directive, it's actually carved out entirely from any of these duties that the auditor normally performs on information provided to an investor. And the only thing the auditor needs to do is check that the non-financial statement actually exists. So if we put that together with the fact that this type of information is of increasing relevance to investors, I think that raises the question, are we doing the right thing in terms of assurance and audits? And that, I think, ties in very directly with the theme of reliability. When I think about relevance, clearly one of the topics there is the essential topics is the issue of materiality, which has been mentioned on a number of occasions. As I think is highlighted in your report, we have also noticed that, unfortunately, information that is material to investors is not always provided. And unfortunately, a lot of information that is probably not material to an investor is provided. And both are problematic. The first one is obvious, but the second one is also problematic because all this non-material information and all these non-material disclosures clutter up the report and to a certain extent obscure the material information that is actually there. That is also an issue we need to deal with. Again, there are many dimensions to this, but clearly the issue of enforcement there is a key one. And we need to think carefully, I think, also about how do we ensure that this legislation is properly enforced. And if I put everything I've just said under those three themes together, there is, for me, one very obvious tool that we need to consider very carefully, and that is the role of standards. And all of you will have heard that on the 28th of January, Executive Vice President Dombrovskis announced that we would explore the development of standards for use in this area. This was to a certain extent a response to the ECOFIN Council, which on the 5th of December of last year adopted some conclusions on deepening of the Capital Markets Union, in which it invited the European Commission to consider the development of non-financial reporting standards for use in Europe. So that again underlines that the role of standards is very much on the political agenda and is something that we will look at very carefully. There is another dimension which I think was mentioned just earlier, for which standards are also relevant if we want to move towards digital reporting, as we have done for financial reporting with the European single electronic format. Then a standard is really essential, because it's only when you have a standard that you can develop a taxonomy with which you can tag the information. So that is another dimension that highlights that standards really, I think, need to be at the center of our debate, or also for that reason. Now, there's another reason why maybe moving to a common standard might be an interesting idea. And this is one which I hope will not just impose costs on preparers, but could actually alleviate the costs that the preparers face. And it was discussed in the last session, which I think was a fireside chat, right? It was okay. I don't know where the fire is, but okay, it was a fireside chat. And that is the fact that because at the moment there is no consensus about what the reporting framework should be, there are lots of requests to which preparers need to reply, whether it's from sustainability rating agencies, whether it's from credit rating agencies, whether it's from investors, etc., etc. And each request is slightly different, asks different questions, and that imposes significant costs. Some companies tell me that they get 40 or 50 questionnaires every year, and they have a full-time staff dealing just with that. That is a cost. So perhaps if we can create more consensus about what is the information that needs to be provided, and consensus can be embedded perhaps in a standard, that will also alleviate some of the, what I think are unjustified costs that preparers are currently confronted with. So those are the kind of themes that I wanted to explore and to put on the table. I'll say a few words on process now. I've already said that the Commission has committed to make a proposal in 2020. I've already said that my personal wish is that this is as late as possible in 2020, so that we have the time not just to take our time, but to do a thorough job and to do a proper impact assessment and to develop a good proposal. And all of that does take time. There are lots of steps in the way before we can reach a proposal or make a proposal. And you should expect that we will launch a public consultation on the revision of the Non-Financial Reporting Directive in the immediate, in the very near-term future. Ideally, it should already have been launched, but life is always more complicated than you expect it to be, and therefore it hasn't. But I'm very hopeful that maybe even within the next, well, certainly this week, that we'll launch the public consultation. I'm in the hands not of the gods, but of my bosses, so they will decide. Secondly, we need to prepare an impact assessment, and that is a critical part of our process, and we will need to get that impact assessment past the regulatory scrutiny board. That is something that we hope to do sometime around before the summer break, perhaps. And then there will be the proposal. And that is a kind of a classical process for developing any piece of legislation in the Commission. Proposal for legislation. But in parallel with that, there are other things we need to do. And again, I return to the theme of standards, because we do not have a lot of time. I mentioned the new legislation that's been adopted, the investor disclosures regulation, the taxonomy regulation, which contain very, very near-term deadlines. Investors are going to have to start disclosing in line with those pieces of legislation very soon. And therefore, there's a lot of pressure to make it, to create the conditions where in which investors can also receive the information that they need. And that is, I think, the urgency that's also behind this piece of work. And the reason why we cannot afford to do things sequentially, but I think we need to do things in parallel. And hence, the reason why Vice President Dombrovskis already announced that we would start working, or at least we would kickstart preparatory work towards the development of standards, because there is that urgency and we need to do many of these things in parallel. So I'll stop there, because I think I've probably reached my time limit already. Again, if there are questions, if there's time, I'm happy to try and answer any. There's only
yeah, please go ahead.
There's only 2 rules. If you ask a question, your first question should be a question, and there shouldn't be a second sentence. And if you really have difficulty asking a question, just start with "my question is," and then it'll sort of go very, very smoothly from there on. Thank you.
So what I would propose is to give people an opportunity to ask a question. We'll just take a couple of them, just one round, and just stick to 30 seconds. And I really like your proposal. My question is, that should be the mandatory beginning, since we're talking about mandatory measures. Hands up. 1, 2, 3. You got these 3. Anyone who doesn't raise his hand now will not get the question. Okay, we got 4. So we'll start from the back, and then I see 3 ladies in this row. So please, Mark. There's a microphone in your armrest. Then the chair next to you. Okay, we'll start from here. You figure out the mic in the mid.
I can shout.
Please do.
My question is, publication of the fitness check, when is it still relevant since you're moving ahead? Secondly, linked to the Non-Financial Reporting Directive, country-by-country reporting for extractive industries. We saw in the report that extractive and energy sector is doing very poorly in terms of sustainability reporting, but there's another piece of legislation in the Accounting and Transparency Directive that's very important, which is about the reporting of payments to governments. What are you going to do with that piece of legislation? Will it be reviewed? Thank you.
Let's perhaps do answers right away so we keep the tempo. Yeah.
Okay, thanks very much. So I was expecting the question on the fitness check. It is still relevant. We will publish it, but it will be, I suspect, during the period of the public consultation. I should emphasize the public consultation, because this is a major initiative in the Commission's work program. The public consultation will be open for 3 months. So if we launch it, say, well, it is already mid-February, then it should remain open until mid-May, if my math is correct. And on country-by-country reporting, well, these are two separate pieces of legislation. Chapter 10 of the Accounting Directive, which is the country-by-country reporting for extractive industries, which I think is the one you were referring to, right? It's not the fiscal transparency one, which is still a proposal that the Council is arguing about. I think there might be some kind of link in the sense that extractive industries, because they include oil producers, coal producers, might be an industry that attracts some attention, and there have been some references today to the possible need for sector-specific standards. The ISB also has a sector-specific standard for the extractive industries. So who knows, maybe we'll need a non-financial reporting standard for the extractive industries. But other than that, I don't really see a direct link with the country-by-country reporting requirements and these non-financial reporting directive. I know in some countries the two have been implemented together. In fact, for example, in Spain, I think also country-by-country reporting on tax transparency has also been implemented as part of the same law that transposes the non-financial reporting directive. If we need to do a piece of work on that topic, it'll be a separate piece of work.
Excellent. Over there? Yeah, please start. No, just in the behind, just in the back. That's you standing, sorry.
Thank you very much. Alexandra Polińska from FISMA, representing the interests of European asset management industry. Could you please shed some light on the scope of the future legislation, whether it would be a directive or regulation? I mean, it would be also very useful if you could elaborate on that. And in terms of the scope, whether you plan to enlarge it, and if yes, to what extent? Thank you.
Well, first of all, it won't be our decision. It'll be a decision of the Parliament and the Council. But the only thing I can recommend at this stage is that you read have a look at our inception impact assessment, which has been published for feedback for a month since. Well, I can't remember exactly. Maybe it's already reaching the end of that month period. Anyway, it's public. We also have, I think, a roadmap that we've published in which we set out some of the key parameters and scope of the personal scope of the legislation is certainly one of the issues we need to look at. And I already referred to this a year ago when we discussed this following the publication of the first report by the Alliance for Corporate Transparency. Now, exactly where that lands, again, is not for me to say. We haven't, certainly not at this stage. We haven't. We'll consult about this in our public consultation. We'll look at this in the context of our impact assessment, the preparation of our proposal, and ultimately the decision will be made by the Parliament and the Council. So I think there's not much more I can say about that. As to whether it'll be a directive or a regulation, could be either. You may have noticed that the title of our inception impact assessment refers to a regulation on non-financial information. I can't remember whether that was an accident or deliberate, but it does suggest that it is a topic we're reflecting about.
Excellent. And there are two questions in the same line. I'm sorry, I haven't seen you before, and I lay the conditions.
My response was responded to.
Excellent. And there was one more here. Same. That gives a space to you, please.
Yeah, just one question. My question is, how consistent is to work in this direction, which is great, honestly, if we continue measuring our economies using only the GDP?
Well, it's an interesting question, but really outside my scope of competence. I think you'd need to talk to people in probably Eurostat who work on national accounts. We're just, the difference between a microeconomist and a macroeconomist is macroeconomists are wrong in general. Microeconomists are wrong about specific things. And we're more on the microeconomist side. We deal with specific things, not with these kind of general national accounts kind of concepts. Yeah.
Excellent. Please join me in giving a hand to Alain again. Thank you very much. And food and drinks are outside, so please be our guest.